one of the things that's been of real interest to me as a young man is science fiction. I've really enjoyed science fiction. You sort of like see these people with big heads and things like that. So this whole idea of future technology, futurology. So we are delighted to actually invite 3 tax futurologists, and you'll be able to see what they look like. So with that, Len, Robert, and where's Paul? Paul, thank you very much. Please.
Right, this feels very strange because in a previous life I was president of the Institute of Chartered Accountants in England and Wales, so I used to sit here rather a lot. And one lesson I thought I'd learned was always make sure you get one of the seats near the door so that when things get difficult you can do a runner. Len and Robert clearly learned this lesson better than I did, so I think I'm stuck here for the start. So a little bit about me. I'm a former president of ICAEW. I spent 40 years in practice with a small firm in the Southwest as a tax practitioner. I sit as a member of the board of the Office of Tax Simplification at HM Treasury. You may know the board of the Office of Tax Simplification is about to be done away with, as is the OTS, although that was a decision made by the former Chancellor. We now have a new one since I got off the train this morning, so who knows. I also sit on a couple of boards at HM Revenue and Customs, one that looks at administrative burdens for small businesses, and I'm on the panel that looks at potential breaches of the general anti-abuse rule. In the rest of my time, I'm retired now, by the way. I advise technology companies on how to make their products appeal to tax practitioners. So it's Friday afternoon. I'm feeling optimistic. So I want to paint you a picture of a digital future for tax. And I think Len and Robert will probably shoot me down in flames, but I'm going to keep talking for about 5 minutes just to get as much of the good picture there before you guys bring me back to reality. Is that okay?
I don't know what you're talking about.
Let's just hope it stays that way. Okay. So how might technology change the world of tax that we all know and love over the next 5, 10, 20 years? Well, I mentioned the Office of Tax Simplification. Is technology going to simplify tax? I very much doubt it. But 2 things it might do are make the tax system easier to navigate. Who cares if it's very complex? If technology can make it easy for people to navigate, the kind of people who reach out to TaxAid because they find it too complicated, wouldn't it be great if they could just use a piece of software that gives them the understanding they need without knowing how much complexity there is behind it? Should tax legislation be written with a digital world in mind? Should tax legislation be written so that it can translate direct into code? I think we'll see a lot of changes on those 2 fronts over the next 10 years. The brief for this session talked about redesigning the tax system. Well, the OECD paper, Tax Administration 3.0, has some aspirations for how tax administration might be redesigned. A move towards real-time information recording. A move to embedding compliance within taxpayers' natural systems. So wouldn't it be great if your software automatically had tax rules built in? Well, I think maybe it would be great if they were uncontroversial tax rules that we all agree on, but it wouldn't be so great if they were very controversial tax rules that we perhaps don't agree on. It would be great if that was embedding in a transparent way. It wouldn't be great if it was embedding in an opaque way. So a great idea, but some potential problems. And another big theme of Tax Administration 3.0 is personalization, so that the taxpayer or business has a more personalized experience of its encounter So pre-population of tax data, why should I have to send information to HM Revenue and Customs when they already hold some of it? Why should they have to challenge me? Why shouldn't they tell me what they have? Why shouldn't they go out and get even more information so that I can challenge them? Some countries have gone a lot further down this road. Denmark's been pre-populating since 1988. In some countries, it is simply a question of looking at information on an app and saying, yeah, I agree, that's my tax return done. How does that affect taxpayer attitudes? Does it make the experience better, easier? Or does it run the risk that taxpayers aren't going to bother checking the information? They're going to take the view, this is what the tax authority thinks, why should I bother to challenge it? New technologies, blockchain, love it or hate it. If I was talking to an all UK audience, I'd say it's the Marmite of tax technology. You either absolutely love it or you just don't want it in the house. What can you do with it? Well, cross-border taxation could be made much more transparent, much faster, much more secure. For tax authorities, a degree of transparency through distributed ledger systems. You could use split payment to separate VAT from a transaction and take the tax straight off to the tax authority. You could reform payroll completely. Why would an employer not be able to use a blockchain to just say, here's the gross pay for my employees this week or this month? And within the smart contracts in the blockchain simply does the calculations, takes the tax, pays it to the tax authority, the pension contributions off to the pension fund, and the net pay off to the employee. Artificial intelligence in the tax world, in the advisory space, how much of our jobs is it going to take? Possibly more than we think. Should we worry about that? I don't think so. I don't think AI is going to replace the judgment we all bring to the job. I don't think it's going to bring the empathy we all bring to conversations with clients and taxpayers, but it is going to take away some of what we do. I don't think we should fight that. I think the main question in my mind is again about transparency, a word we've heard a lot today in earlier presentations, and opacity. We need to know what the AI is actually doing, how it functions, and who takes responsibility for what it decides. Tax authorities around the world are looking at AI as a means of identifying potential breaches of tax law, failures in compliance. The French tax authority recently used AI to scan aerial photographs of France to find people with swimming pools who hadn't declared their swimming pools because there was a tax liability potentially associated on the property tax. Taxing differently. Do we just have to think about the mechanics of tax, or do we think about what we can tax? In the UK, centuries ago, there was a window tax because windows were easy to count. You could walk around a building and say it has X windows, here's the tax bill. It's why you can walk around parts of London and see windows in old buildings still bricked up. That was tax avoidance 19th century style. Why would we not look at a tax like in the UK income tax, which is an annual tax based on an annual set of accounts, and say for a lot of smaller businesses, if we're looking at real-time reporting and we've got transaction by transaction data, could we not turn that periodic tax into a transactional tax? Is that fantasy? Russia does it. For very small businesses, you can elect to use an app on your smartphone to be taxed on your small business transaction by transaction with a copy of the invoice going direct to the tax authority. So those are just some of the things I think we could see over the next few years. But I'm reminded of something Patrick said earlier on this morning. You have to be conscious of what you're automating. That is really, really important. It's easy just to get carried away with technology, isn't it? Wonderful, it does all these things. We have to just keep the sense check and our feet on the ground of what it is we're actually asking it to do. And at the end of the day, technology can transform the world of tax. if we're prepared to put up with the changes it might make to our civil liberties, of what tax authorities know and when they know it and how they use that information, and perhaps more fundamentally, if we're prepared to pay the cost. There's a word other than transparency that's come up a lot of in a lot of sessions this morning, and that's trust. It's a word that Ali used right at the beginning. Trust is about trusting individuals. It's about trusting individuals who design this technology. It's about trusting governments to use it properly. It's about trusting each other in how it's designed. So I think the last point I would like to make on my vision of a bright future for digital transformation is a concept that once again is in Tax Administration 3.0, and that's the concept of co-creation. Because I see tax technology failing when tax authorities think they know best, when tax authorities think they know about small businesses and they don't, and when they think they know about how taxpayers behave and they don't. The concept of co-creation is about bringing together taxpayers and their representatives and technology companies together with tax authorities to design something that actually reflects the real world, taxes the real world, doesn't add new business burdens, and in technological terms is deliverable. So I think that is such a no-brainer. We can all just go home now?
I agree. I think you've solved it.
Yeah, okay, right, I'm off.
Robert, no, please. You come with a broader context. I'm in a much narrower kind of viewpoint. So.
That's too much. No, I will not comment. That's what we are talking here about tax digitization, and you indicated it. It might be the bright future, but let's say within the industry, what we are really facing, or what here I'm, let's say, talking somehow as an advisor, digitization gives us the opportunity probably to run existing processes more cost efficiency. That's it, for various purposes, and we will talk about it. In addition, tax digitization means, and we also talked about this, transparency and trust. Let's say these new tools or these new, let's say, digital opportunities provide the society to gather more granular information for all transactions throughout the world, etc. So what we are currently seeing, and there, let's say, the tax authorities are ahead of the industry, and therefore we are struggling and very often complaining. They are establishing now a very transparent, let's say, framework to gather as much business information as possible. With global regulations today talk about, let's say, IFRS accounting rules. Then we have the regulatory, let's say, regime. A lot of very granular data points are captured for regulatory purposes. We have anti-money laundering perspectives, which also capture a lot of information. Now, very interesting, let's say, with the QI, FATCA, CRS, now with this emerging CARF regulation, we see they are the tax authorities, and I think it might be fair nevertheless about it, are capturing really the transaction, very granular transaction basis per investor. So you can imagine what type of ultimate granularity, transparency will be established within our business. So the question is, if I'm a service provider, what is this heading for? I have my legacy systems, adapting my new systems, probably not only talking about cost efficiency, probably we have to think about what are the new value proposition, because this will be very high costs. And therefore, as a tax practitioner, as an industry, we often complain about the cost element. But ultimately, and this is in addition, and it's captured within here in our framework, tax digitization, or the tool, which are, from my perspective, just tools, DLT technology, other technologies, they definitely will change existing business models. They will create or already created, let's say, new asset classes, especially the cryptocurrencies, but this is just the starting point for new digital assets, first digital twins and complete different other asset classes. And therefore, I think the tax authorities, they are not providing us with a framework how these new asset classes might or should be taxed, or how they will get the information thereof. It is very clear that ultimately the very granular transaction data somehow will be captured and will be taxed. And I think that is creating opportunities, but currently what we see, due to sometimes to a lack of, let's say, ultimate guidance, significant cost risk for the intermediaries who have to provide this transparency, establish the systems, but are not really the ultimate beneficiaries of these developments. And that is, let's say, the sandwich position of sometimes of the financial service industry. But talking about the great opportunities you already addressed, probably talking about or addressing the let's say what we see, how the current tax digitalization is running. Sorry, there was no question. Sorry.
Thank you, Robert. I agree broadly with what you said. I'm Len Lipton. I'm from GlobeTax Services. I manage the sales group. And unlike Paul, who's an accountant, and Robert, who's a lawyer, GlobeTax are neither. And I often describe to people in terms of how we do what we do and where we sit is that there's a country's legislature who decides that they want to pass certain laws and maybe tax certain things or people. And then there's generally a government agency which will participate in the legislation, but is ultimately tasked with writing the rules that one then has to follow. And you've got Big Four accounting and big law who will interpret those things. And then that gets to bureaucrats and people that actually have to manage this, who don't yet have much AI to rely on, except perhaps to count swimming pools and windows, who then have to make this work in the real world. And so what will typically happen in a number of different jurisdictions is that there becomes an administrative practice kind of layer to all of this. And that's really where GlobeTax sits. We are a withholding tax recovery firm. We work exclusively on dividends and interest recoveries cross-border for our clients. So just for context, in terms of how we come at this issue, we're really kind of an inch wide and a mile deep. So it's pretty much everything within that sphere, but not much beyond it. I thought something that Yvonne brought up in the last panel was an interesting point. She mentioned that the last piece of legislation for some rebuilding and in the digitization and doing chips production in America also included an $80 billion support for the IRS. It will be interesting to see where the IRS spends that money. We interact with the IRS regularly to get certifications of residency for our clients. That is a paper-based process that takes somewhere between 3 and 4 months. It takes the IRS 3 to 4 months to issue a certification that someone is a US-based taxpayer. It's astounding. That should be instantaneous. If I filed my taxes, that should be an immediate response. It also costs $100 or $200 to get that certification. That's absolutely absurd. And they do that because they have to pay for the service. That $80 billion won't go there, because that has nothing to do with revenue accounting going into the US government. So I'm making the point really that where governments spend their money is really important to see what the impact will ultimately be. Is it for the benefit of the taxpayers? Well, maybe, but is it more potentially at times to protect against the headlines where the government was found to be asleep at the wheel because of the Panama Papers or something else that came out, and there was some huge fraud. So I think that all of this unfortunately exists within a little bit of a political and headline landscape, and so it's not necessarily looking for the best way to solve an issue. It's looking for the best way to promote yourself to get reelected. So I think that we all find ourselves, unfortunately, in that kind of environment. In terms of digitization, and I think that, Paul, a lot of the things you said in terms of how the blockchain could operate, whether on a micro or a macro basis, certainly in a small economy, if you set certain things up with trusted counterparties, in our country, in the US, ADP runs, call it 70% of the payroll systems around the country. Someone like that could broadly administer a sales tax regime or something like that because they're a trusted counterparty. But I think that you struggle to find that trusted counterparty once you exit a country's borders. And then you have a lot of pushback and so forth, and you see it within the EU and the discussions that go on about harmonization, and you see it within the OECD, and everyone seems to pull back from the table a little bit when they're giving up sovereign rights in terms of how to manage their own tax affairs. So that's my initial responses to some of the things.
Yes, and therefore, let's say that is what we've heard about, and that my interpretation, really the jurisdictions build up now the transparent, what I call not the CAF regime, but let's say sort of a very detailed transparency regime. And probably this will not, from my perspective, will not end, or will be the beginning of even much more transparency. Because what the jurisdictions ultimately can agree upon, I think, is sharing information, and everyone is looking for very detailed, granular information, which could be linked via intermediaries to the ultimate beneficial owner. How then the tax calculations will take place for each jurisdictions is a different topic. So let's say from a technical perspective, going forward, granular information, and then each jurisdiction will decide how this will be taxed, let's say nationally. Why I'm here, sitting here, let's say, providing you with an example. In Germany, since more or less 1 year, it is in the rules, and now the coming months or next year, there will be products that crypto fund units are eligible asset classes. So DLT solutions for fund units as such. And let's say there is no specific tax regulation. So these fund units will be taxed as current fund units. Okay, for the starting regime for institutional investors, probably no issue. We all heard, let's say, I think 2 weeks ago, KKR announced that one of their new partnership funds, I think was 4 billion infrastructure funds with 4 billion committed capital, will be tokenized. So the question is how the taxation will be established upon tokenized partnership units, if we take into account that usually partnership accounting has significant time delays until it is established for the ultimate investor. And now you have let's say, a legal or economics setup, to put it this way, which can be transferred permanently, providing liquidity in this new asset classes. So it's really creating, I think, some additional issues for the national tax authorities to think about how they want to adapt, change, or whatever, alter their tax regime or provide some guidance. If they would just, let's say, tokenized partnership units would be securities, and they would be taxed as securities or fund units or whatever from a German perspective, whereas this partnership regime, this would create immediately sufficient tax arbitrage opportunities. So the integrity and the trust issues is emerging. Who is driving this? Not anyone intentionally, let's say, but the erosion of, let's say, tax certainty is driven by technological development. And I think the tax authorities should pick up this issue and probably provide some guidance for the future, what they are looking for. Otherwise, we will have tax arbitrage discussions, let's say, a few years ahead for many of these structures. And yeah, so, and then I'm talking too much, sorry, excuse me, but I think there's a fascinating topic. We had this with the, let's say, DLT partner fund units. Let's say ultimately or currently, these crypto fund units are potentially issued with a very strong connection with, let's say, German or European regulated financial intermediaries. But with DeFi and other, let's say, business models, there is no intermediary who can act somehow as an tax agent of the tax authorities. And we as financial intermediaries are very often nothing else as tax agents. And if this, the role of the taxation get more loose, what are, let's say, from a conceptual perspective, the solution set the tax authorities should think about it? And with these, let's say, new technologies, more and more the denationalization of conducting business will get, or globalization in another perspective will even increase. So it will be very interesting whether just one app would solve this for the individual investor. It could be possible, but the intellectual framing from the tax authorities or from the legislator will be very significant to drive this way in this way.
Yeah. And the issue also becomes a Thank you. Tax authorities have their viewpoint and their priorities. Investors have theirs, often in conflict because investors want to pay as little tax as possible, whether legal or not. And then you have, and it became clear, I think, during FATCA and CRS, and it's remarkable that there is a global regime for information sharing and that it does continue to grow and it's being used more and more effectively. But what those regimes did essentially was to deputize the intermediaries. They didn't want to be deputized, the banks, right, the sub-custodians in each market, but they were told by the tax authorities in their market, you're the withholding agent, that's your job, that's where you make your money and do your work. And if you get this wrong, we're coming after you. So what really happened was that the hammer dropped on the financial institutions who have total disincentive to get this wrong. Maybe that was the right way, but the problem, I think, with that is that it not only created an adversarial relationship between the bank and its client, but it also layered a huge amount of cost, need to buy and maintain technology on those institutions. Governments didn't pick up that tab. The governments are asking for more money. And so not only did the investor community have to pay more, arguably their fair and share in taxes, but they also had to pay for the development of the regime by having all this cost passed along through larger banking fees, commissions, et cetera. So I think it would be wonderful to have a great big database in the sky where I can go to the IRS and through a DLT get certified that I'm a US resident and use that around the world, maybe get paid my dividends through a blockchain as well, have it very clear, what I'm entitled to versus not. Where's that all going to sit?
Yeah. Let me pick up that point of cost, because wearing one of my other hats, digital. So the world of work's changed, the world of technology's changed. The other thing that's changed is tax authorities do things in a particular way. They like over-engineering. So making tax digital is now a hugely over-engineered program with 18 months to go before launch of the income tax section of it. HMRC is still coming up with new tweaks to make it even more complicated. I won't bore you with the details, but my worry is now, having already gone massively over time, we haven't got enough time left to deliver what they think they're going to deliver. What's my point? The more you over-engineer something, the more someone has to pick up the bill. Exactly your point, Len. And in this case, who's picking up the bill? It's small businesses, disproportionately small businesses. Big businesses don't care. They've already got digital records. A lot of small businesses, a lot of the businesses I used to advise, don't. They had perfectly sound records. They've got to make a change. They have to pick up the tab for it. The more you over-engineer, the bigger that tab is. And by adding more and more complexity, you kind of lose sight of the original objective. Again, Patrick, I'm going to go back to something you said. Compliance by design is a lofty goal. It really is a lofty goal. But you have to keep thinking about the goal while you're running down the field, dribbling the ball. Otherwise, by the time you get there, you might find it's moved. And it has moved. How do you solve that problem? I think you go back to this concept of co-creation. If HMRC or ministers had just asked the question, how do we reduce error in business records? And they'd ask the accountancy profession, they'd ask tax advisors, they'd ask software developers. I think they would have got some far simpler, far more interesting answers. And I think they could have designed a system that would have been delivered by now, delivering on its aims with far less cost. So I completely agree. Somebody has to pick up the tab. And there is a lesson that we all have to learn from this. It's talk.
I completely disagree.
I'm just going to switch your microphone.
No, you're absolutely right. But for example, what is my understanding with that's another tax digitalization topic globally. What I've learned from my colleagues who are really working on these topics, let's say these are the big or the major, let's say, companies who are covered by this 750 million euro minimum revenues. So no question, no small business. To cover this information, currently they could pick up internally with their programs, or of course their accounting system very often highly digitized already, 80 data points. But the granularity the tax authorities are really looking for is much more granular. It is not on, it doesn't stop on the accounting level or on a consolidated accounting level at all. It really goes down to the transaction, up to a certain degree, much more detailed information. So in comparison, currently, probably big companies, they can capture 80 data points. For the global experience, they would need 150 or even more, 180, 200, it depends. So from a cost perspective, we now see each transaction, very granular data. So what are really the tax authorities on it, and therefore I disagree up to a certain degree, is on an international basis, they are looking for much more information, and the tools and will enable them to ask for this information. In the past, it's impossible because we are paper-based. Now it is possible to ask for this information, and due to the fact that it is possible, and we already see this movement in this direction, they will ask for even more information. So I'm a little bit concerned. So whether it's over engineering or whether they are on the learning process, that they are have the tools really to ask for even more information. So they started with a limited set of, let's say, data points they were looking for, and in the meantime, probably, I'm just guessing here, the UK experience, they can see, okay, we can ask much more information. Of course, we want to have this information, disregarding for what immediate purposes, but on the midterm run, it could be very beneficial for the tax authorities to have this information. So from my perspective, we are really looking forward in various jurisdictions for very detailed, even much more detailed information, data points than currently, enabled by digitization. Where this digitization leads to, what will be the cultural framework, society framework, that's another question.
Right. I know Ollie's going to come up with a cane and pull us off stage in a moment. So I'd just like to maybe expand on Robert's point. I think that, yeah, unfortunately, it's a little bit of a natural occurrence of how it all works, right? As the government gets smarter and realizes there are more data points to ask for, perhaps they start to ask for more, to the point of over engineering. You don't want to, and then you can take a technology project that should take 6 months or a year and have it take 9 years. But during that 9 years, many things have changed, and so they probably kept adding new features and new different things to do. However, that then moves the goalposts for the required filers and everything else. Maybe stop the financial engineers from creating new asset classes and things like that. Yeah, but the reality is tax is a moving target. There is always going to be a conflict between someone's desire to pay tax and the government's desire to collect tax. So I think the clearer the rules can be, more principle-based rather than specific rules-based, the regimes and systems can be, the better chance everyone has at keeping up and having a cohesive system that can actually hang together function in a manner that funds the governments to the degree that they need, but also doesn't overly burden everyone else and make it such an area of conflict, right? It's so adversarial that it's hard to see how it really gets solved unless everyone says, yes, these are actually the principles under which governments need to fund themselves, and here's how we can all kind of play ball, if you will. So,
okay, I know you. We have.
no minutes.
I'm going to claim 30 seconds and just claim ex-president's privilege of saying, I think what we absolutely agree on is technology is going to change a lot of what we do. However, there are a lot of things we have to learn about the practicalities. The first electronic tax return I presented to one of my very elderly clients, who was a very angry elderly client. He didn't want to file a digital tax return. He printed it out, brought it in to see me, and he said, "Paul, I agree with all the figures on this return, but I don't like the questions, so I've changed some of them by hand." I just repeated it, "Are you happy with the figures?" And he said, "Yes." So I pressed the button and transmitted it. So my last thought for a Friday afternoon is I still believe we can change the world of tax through digitalisation, one app at a time. Thank you.